3 strategies, 1 system to rule them all. Are you frustrated with not having a trading system, one that works in all market environments? The problem with most SMC strategies being taught is they just don't work for funding evaluations. But you're in luck because this system I'm sharing with you, system that rules them all, does. In the last video, we dove into strategy 1. In this video, we'll break into the second strategy, which is the ITOB. By the 4th chapter, all 3 strategies will tie into one ultimate system. Let's cut through the noise. It's all about value here. No BS, no fluff, no guru jargon, just straight up value. Just so you know what you're getting into, this is the ITOB right here. It is a high that fills the fair value gap. That last up close candle that filled the fair value gap is the ITOB. It can be a little confusing, but I'm going to give you the nuances that you need to rock it with this strategy. I believe that diagrams and models are the best way to learn it first. We're going to jump into that. You'll get a move up in price, and this move up will be aggressive, and it will cause displacement, which is, you can just think of displacement as price moving up aggressively, creating fair value gaps. A fair value gap forms. You get a move up in price that is aggressive. It creates displacement, which all displacement is just a fair value gap forming. There you have your fair value gap. Price then retraces into the fair value gap, and then a low is created. Price moves out of the fair value gap. A low has formed. It can be a single candle. It can be a wick. It just needs to go into the fair value gap and then leave it. Now you have an intermediate term low, which is a low that filled the fair value gap. There's your intermediate term low. Now, because this is a bullish situation, the last down close candle of that low is going to be the ITOB. It's usually like right in here-ish, somewhere in here. We're going to highlight the part of the candle that's inside the fair value gap. We're going to make it orange. And then when price revisits that last down close candle, that is the ITOB. That is where you're going to go long, and stop goes below the intermediate term low. This strategy works really well because you know exactly where to put your stop. There is no question as to where I should put it. You put it below the low that formed, that filled the fair value gap. Let's look at a bearish version. You have price move down aggressively, creating fair value gaps. Fair value gap forms. We're looking for price to touch into the fair value gap. It doesn't have to be all the way. It doesn't have to be 50%. It doesn't have to fill it 100%. It just needs to go into it. I would say at least 10% of the fair value gap. And then it needs to leave the fair value gap, creating a high there. The last up close candle inside of the fair value gap, that is going to be the ITOB. This high that formed here is an intermediate term high. Now we want to see price come back into the ITOB area zone, I guess you could call it, and then wait for a reaction, get a little move down, and then enter short. Stop goes above the intermediate term high. Voila. That is how you do it. I hope you're seeing why it's called the ITOB. It's the intermediate term order block. That's why it's called the ITOB, because it's using advanced market structure, intermediate term high. Voila. Then that's the order block that is inside of the intermediate term high. Let's move on to examples in the chart. All right, here we are on a 3-minute chart. I found the 3-minute chart has the best win rate in the lower time frames. Obviously, the higher the time frame, the better the win rate. All right, let's look at some examples here now that you understand the diagram and you kind of know what you're looking for. I got this strategy from watching episode 12 of the 2022 mentorship. It's the one where he talks about advanced market structure and intermediate term highs and lows, which that's an intermediate term high low, high there. Any high or low that fills the fair value gap, that's one right there. And then he also has a second version of an intermediate term high, but I found that there's no real edge to using that version, and the algorithm cares about the second version, the one that fills the imbalances. Once I found ICT's episode 12, one day I was driving home and it just clicked in my head, like, what the fuck? Like, real order blocks are intermediate term highs. That's what I should be using as an order block. And I don't know why it clicked in my head when I was driving home from work. I think I was listening to him in one of his videos, because I've watched every single video that dude put out except for this year's, because I just don't really have time anymore to watch. But when I worked, that's all I did. I would work, listen to it, and I'd get home, study it, work, study, both at the same time. And I've watched 387 videos or something like that. If you go through my YouTube, every single one of his videos is finished. And it's that episode 12 that I think has made the biggest impression on me, because it just opened up my eyes to advanced market structure and allowed me to create these two strategies that are unique. No one else does them, and it's really quite awesome. The third strategy that I'm going to introduce into this series, purge and revert style turtle soup. It ties them all in together into one amazing system that really beats them all and rules over all other strategies and systems you're going to ever trade. Let's get into it. As price comes into here, there's some nuances to it that you're going to want to pay attention to. Take out a notebook and write this down. When price comes into the fair value gap, we're going to want to see it come in and then leave the fair value gap. It has to leave the fair value gap for it to count as an ITOB. Now it leaves the fair value gap. We want to see it close outside of the fair value gap. There you go. Now you have a legit ITOB there. The ITOB is the last up close candle of the high that filled the fair value gap. Not the last candle that filled the fair value gap, but the last up close candle in the high that filled the fair value gap. Sometimes it's going to just be a wick. Then you use the wick. It is important to not use the whole candle, but to use the part of the candle that is inside of the fair value gap. Not every ITOB is a good ITOB. These are nuances that I'm going to have to explain probably in the fourth video. That will be a really long, detailed video. These ones are just quick introductions. We're going to walk through how to enter it. Alright, now price has entered into the ITOB. Do I just set a limit order here and hope that it works? No, don't ever do that. We're traders that are going to trade on the right side of the V. Here is the V. We'll use it as this V, like this. It's actually an upside down V. It should be like a TP. We're going to trade on the right side of the TP. We're not going to set limit orders here, hoping and guessing. We're going to trade after we see a reaction. We know where to put our stop loss. Because of the volatility on NQ today, if I was to use a 3-minute chart to enter, I would be risking around $600. I don't want to do that. I don't want to risk more than $250 for a $50,000 account. Let's drop down to the 30-second chart. Now we're on the right side of the V now. We have a reaction. The reaction is very important. You just want to blindly enter with limit orders, guys. I know some people teach you to do that. Don't do that. You think you get a better entry price? If you traded on the left side with the limit order, you would have entered right there. We're going to enter right now. Same fucking price, right? But we now know where to put our stop. Where would you put your stop if you were trading on the left side? You don't fucking know, because it hasn't told you if it's going to work yet or not. I actually like to give it a little bit longer, because what price is likely to do in any reversal, especially in Q, it's going to come down and then you're going to get a failure swing. I want to enter on that failure swing, allowing me lower risk. Then here is your failure swing. Sometimes a failure swing creates a new high, and as soon as I see a reaction showing bearishness, I will enter. But I would enter 2 contracts. I'm going to put my stop the top of the ITOB. There, I'm going to put my stop just above there. Now, who got the better entry price? The limit order guys or us? We did. Who knows where to put their stop? We do. Who's likely to win more trades? We are. Who's being a penny pincher and is trying to save a couple bucks by not having to pay the spread? these guys. They think limit orders, oh, then I don't have to pay the spread. The spread's like 20 bucks, man. Just enter the trade after you see reaction and you'll have a higher win rate. How much is a stop loss? $300-$400? He saved 20, 30 to lose. 260, that makes no sense. It's not good math. It's not good business. Now I'm going to exit. My risk is 43 to 51. It's 10 points. I'm going to sell at 1.5 times risk. I'm going to scale out because profitable traders scale out. ICT tells you to scale out. Why are you guys not scaling out? Every single profitable trader does it. Every unprofitable trader is all in and out. And the guys that tell you R&R doesn't matter, blah, blah, they don't understand trading. They don't understand risk of ruin. And they probably live in their mommy's basement sucking on her tit. So 28 would be 1.5 times my risk. I'm going to exit the first there. But I'm going to show you guys a secret. To make at least 2 times the profit you're making now, and know exactly when you should be exiting a trade, make sure you watch to the end, because there's something special for the viewers that watch until the very end of the video. Before we get into the secret, check out this. As always, if you're interested in funding, check out my website. It is verifiedfundingcompanies.com, the best funding discounts in the funding space. I'm going to start adding more content to the newsletter, like how to pass evaluations and stuff like that as well. Blue Knox is having 3 flash sales. There's a really special one that I got together with them that is only for my following. You won't see this discount anywhere else. It is a 50K account for only 18, 100 account for only 28. I don't know if you guys know, but I do one-on-one mentoring. I don't usually advertise it or put it out there, but I do have a few openings. Not many, but a couple, and I'd like to fill them up. This is your one time where I'm probably going to advertise it out here and accept anyone into the program. All right, that's it. Let's get back into the content of the video. Sorry to interrupt it, but I had to let you guys know. I'll show you guys a little secret here. Go to the 1 minute, and when price is really moving down expansion phase, you'll notice something. Let's say your profit target is here, right? Let's say after this point, we will only exit after a close above the previous candle happens. For example, let's start with this candle. After this candle, if we see a close above it, we will exit. Otherwise, we will not. The next candle doesn't close above it. Then this one opens. Now, we're only out if a close happens above there. Still in the market. Now we move our stop to there. And we move our stop to here. Obviously it'd be here, and I would just sell into this because this is extreme displacement. You have a trend line there. It could drop down farther, but I would just not be greedy and exit there. But let's just say for sakes, we're going to keep allowing the one time framing down to decide if we're going to stay in the market. We would stay in the market until that one breaks. We would stay in the market until this one breaks, because when price is spooling down, it's called one time framing. It's a market profile term. It's just a phenomenon that happens in price. When it's spooling out and reaching for something, the top of the previous candle will not be broken in a bearish situation, and then the bottom of a previous candle won't be broken in a bullish situation. Then now you have a push above there. I'd put my stop now at the high of that candle there, and then I get stopped out right there. That's a $1,500 trade with 2 NQ contracts, only risking. The original risk was only 300. So that is it's a 5-hour trade, just like that. All right, we'll go through a couple examples of scalping this setup on a really low time frame, like a 30-second, 1 minute chart. You're gonna want to look for these setups on the outside of the range. Let's say we're in a consolidation, like we're in now. Let's say that this is the outside zone. This is the outside quadrant of price, and this is the outside quadrant of price. So you're only going to be looking for these setups in these zones. You don't want to be taking them in the middle because they're likely to fail. The outside of the zone, this is external range liquidity. The outside ranges are external range liquidity. Inside, those highs and lows are likely to be broken. They're meant to be broken. These outside ones are not. They're meant to be traps and reversals. Okay, this is in the outside of the zone. We'll just do replay. We can actually see the price action here. Then you have an intermediate term high wick right there. That would have been a valid scalp right here. That wick that went into there, into the fair value gap, that's an ITOB wick. Could enter there short. And then now this high that went into that wick right there, that would be a valid short. Now this is in the middle of the range, right? This wick, you don't want to be taking that one, because that's why right there. And then this wick that touched into this little baby fair value gap, you could use that for just a tiny scalp. It is within the range zone. This one, no, that's not. There's one that worked. On the lower time frame, they're more likely to be wicks that go into the fair value gap than the whole candle. I also just started a Discord. Me and Runman. You guys want to join, check it out. It's just getting going. Any of you guys that like to post content and like to post charts, why don't you guys check out the link in the description and join the Discord. If you guys are struggling in trading, I do have some opens for my one-on-one mentoring that I do. And you can sign up for a single session where we go through a specific challenge you're having in trading or a strategy you want to learn. Or you can sign up for the 3 sessions program, 3 sessions throughout a month. I've had 60 clients now. I'm glad to say most of them are funded and off and running. I will leave the link in the description for this as well. Check it out, guys. I definitely know what traders need, and I've been in your shoes. I have struggled before. I spent almost 3 full years struggling. I know exactly what you guys need to learn and the process that it's going to take to get you guys profitable, and if you're trying to get funded as well. I think I'm probably the best trader there is out there when it comes to getting funded. I have that down to a science. Alright guys, if you haven't watched the first video, check out the one in the right corner. And then also I'm going to put power of 3 up in the right hand corner. Check that one out. It's very important.